Hello everyone and welcome back. This will be a slightly updated version of the candlestick video. I went ahead and added Heikin-Ashi candlesticks to the end of the video, so please check that out. In today's video, we will be discussing how candlesticks work and how they are superior over line charts. If you find value in this video, please like and subscribe, and with that, let's talk about how candlesticks work. Now, when I first started, I was pretty intimidated by candlesticks and wanted to stick with the safe line chart of the price action. Eventually, though, I wanted to be a real, serious trader, so I learned, and I found it was not really difficult to learn. So let's start with the very basics and go up from there. Let's say we are on the 1 hour chart and each candlestick represents 1 hour. The top of the candlestick when it's green is the current price. When the price goes up, the candlestick increases in size vertically. If the price goes below the starting price, the candlestick turns red and goes down vertically. The top of the candlestick is now the starting price when red, and the bottom of the candlestick is the current price. Now let's move on to candle wicks. Let's say the price goes up in our example, but then we see a decrease in the price of the asset. A wick then appears. The wick indicates what the highest price was in this time frame. When the candlestick turns red and the price falls but then rises, this shows the lowest price point in the time frame. If the price were to go above the starting price, the candlestick would turn green again, but the wick would remain. Now let's move on to when a candlestick forms. Let's say we are watching the end of a candlestick and then a formation of a new one. If the price action is increasing, we see a higher candlestick than the previous one, with the previous candlestick top being the ending price, if it was green, of that time frame. There is also a slight delay when forming a new candlestick, usually a 1 minute delay, at least on the 1 hour time chart. Final thing I want to go over is gaps in between candlesticks. Notice when you are watching your favorite asset and the price skips numbers. This is due to the amount of buyers and sellers and when a large number of either occurs. The price action can skip numbers drastically depending on what's happening. However, this happens a lot without any particular reason, especially with cryptocurrencies. We see this visually with candlesticks as well. If we have a stock that's $100 and at the end of the candlestick time frame and it jumps to the 110 in between the delay of the formation of the new candlestick and then rises to $125, the new candlestick will have a gap in between the old and the new candlestick. There are different names for gaps depending on the situation and different names for candlestick patterns. However, that will be for another video. So why are these better than line graphs? Well, they provide way more information and can show resistance or strength among the bulls or the bears, or in decision making. Candles can show support on the SMA or EMA lines, or they can show resistance as well, and the line graph may not show this. Now let's go over Heikin-Ashi candlesticks. Heikin-Ashi means average bar in Japanese. Basically what happens is the average is taken from the candlestick and used to show a general trend in the asset. It is easier for the users to see what direction the trend is going towards. Now, if we look at regular candlesticks, you can see there is multiple green and red candles. There is also tons of gapping up and down. When we switch over to Heikin-Ashi candlesticks, this clears that right up, and it's more clear where the direction is going. Now, although this shows where the trend is going, making it easier for the trader, we cannot tell where there are gaps because they are filled by these candlesticks. For example, looking at this, we are unsure if it gapped up or down in any of these bars here. We would have to go to the regular candlesticks to see. And you can see there was, in fact, a gap down, but you cannot see that with the Heikin-Ashi candlesticks. However, the clear selling point was in this candlestick right here when it passed through the SMA. And if we look at the regular candlestick, we'd have seen that slightly gap down, but not too much, is mostly accurate. It's also important to note that the current price will not show on the Heikin-Ashi due to it taking an average. However, TradingView and other platforms will show what the real price is, such as you see right here in this purple box. Heikin-Ashi candlesticks are my main candlesticks that I use to see where the trend is going, and I think it is a great tool to use when swing trading. If you enjoyed this video, please like and subscribe. As always, thank you for watching, and I will see you next time. How's that?